All right. I can see some of my tribe already kicking in. Okay, thank you so much. Good afternoon, ladies and gentlemen. I am the head trader and trainer for daytradespy.com. And you know what? I'm just thinking here. We're just sitting back here. I got to be honest with you. I can't keep up to that last one, Anka. I was going to say, I'm running out of breath just listening to her. She's so fast. So, but she's awesome. Anyway, I got to tell you, we're just entering our ninth year here in a month or so of doing this, although I've been trading a lot longer. I never really realized just how much you know until you have to start telling to somebody this. And somebody asked me the other day, hey, listen, can you just kind of go over something about how you came to be so successful? And I thought that was kind of a cool little sort of exercise. So I threw that together into what is now this webinar. And I thought, that's actually really kind of important because great traders really are not made. They actually do go through all the, well, what's that saying? You got to go through hell before you get to heaven. And I think there's a lot of truth to that. So I came out of the trenches, and I'll tell you all about it. So I want to, first of all, thank you for being here, and thank you to the folks at Investor Inspiration for putting this on. And I think that is absolutely awesome, too. So good to have you all here, and I hope you get some good information out of this. And here's my story. Renee also mentioned a few points here, but I'm going to kind of skip some of that. I got to tell you, I used to be an internal auditor, and I dabbled in the stock market back in those days. And I didn't realize just how lucrative things were. And I started trading when my financial guru, I don't want to say the word squandered. Maybe that's that's a little tough, but negligent, incompetent. I don't know what you want to call it, but he lost a lot of my money. I would say half of my account after building it up for years and years and years. So obviously I was not very happy, and I had some words with him and essentially just asked him to, no, I didn't ask him. I told him, cut me a check for whatever is left. I'll be by the next day to pick it up. And I started doing this myself. I had to learn how to do this myself. I took all the courses and everything else. And I guess I quit probably a dozen times. And some of you might relate to this, all right? I traded, lost money, made money, lost money, said this is enough. I'm going to lose my shirt. But I kept coming back, and now, looking back, I am of the opinion that once a trader, you're always going to be a trader because it's in your blood, and you will know that there's a lot of money in this business. You just have to go and get it. Now, a few minutes ago, I took the screenshot. This is from an option chain. There's just two option chains from the calls. Here they are at the money calls. So today we had a low on the calls on this particular one. I don't even know what it is. It doesn't matter. This happens all the time. 6 cents and a high of 66 cents. And there were two things that kept me in the market, that kept me coming back to the market. One was I would look at a chart and I would say, look at this. The market goes up and it goes down. It goes down and it goes up. And every day it goes up and it goes down. Why would it be so hard to make money in this? And I would look at these option chains. I trade options. And I would look and see, look at this. A low of 6 cents and a high of 66. A low of 2 cents and a high of 34 cents. Is this not like 17 times your money, 8 times your money, 11 times your money? Same with down in the next session here, the next option chain, 10 to 42, 17 and 66. And by the way, the same on the put side. And this happens all the time. And I'm thinking to myself, I'm not trying to get 1,700% on a trade. By the way, this is before 2 o'clock this afternoon. Who knows where it is now? All I'm trying to get is, can I not get my fair share? 5, 6, 7, 8, 10%? Can I not get that? So I would keep coming back. I'd keep coming back. All right, let's move on. I kept coming back. There you go. Now, just so you know, I did change some names, places, and dates to protect the guilty. Some of them I just forgot about, and there's still others I wish I had forgotten about that will always be in my, forever etched in my memory. And I'm going to tell you about my journey, my long, arduous journey into success with trading. All right, and lesson number 1. Nobody cares or should care more about your money than you. All right, this is number 1. You can hand over your money to a financial guru or your best friend or your mother, your brother, and as much as they might care, really at the end of the day, they don't have to live with the consequences quite as badly as you do. Because when I handed over my my retirement savings to my financial guy, I didn't realize that that I was, I don't know the word, victim or whatever. I mean, he's obviously just using my money to push whatever the product of the day was, and get his commission. That's what he cared about. I was just the tool. He didn't care about me. So that was my first lesson, that I have to get in control of my own money. And at that time in my life, I was younger, and retirement might as well have been the moon. I mean, that was going to be a long ways from here. And I thought this, he's a good guy, and he's smart, and he knows this stuff, and obviously he's going to take care of me, right? Well, wrong. That was my first big mistake. So I learned that lesson well. By the way, in this business, you get the unlike in school, we get the lesson and then the test. In this business, you get the test and then the lesson. So this was my first big lesson, and I can assure you, I don't have my money tied up with any financial guru right now. Lesson number two, this is kind of a two-step lesson. So the first part is this. My best friend at the time was involved in this gold company up north someplace, and he told me about this amazing opportunity. All right, there were always opportunities, and I handed over a lot of money. Frankly, I now have a mental block as to how much it was. I can't remember if it was $50, $60, or $80,000, something like that. And to invest in this gold company, and apparently they supposedly had a gold mine and a helicopter and all this stuff. Later on, I found it was just a bunch of BS. I think with the money I gave them, they probably got a lot of letterhead printed up and issued a lot of phony. Who knows if it is? I don't know. All I know is this: nothing ever came of it. It was, I think, at the end of the day, it was what we call a pump and dump, and so I'll tell you about that in a little bit. So I realized then that if you ever give your money to a friend, and especially big money, and they lose it for you, you will lose both your money and your friend, because we are no longer friends, and I'm not very impressed, because he fed me a line. If you would have just said, hey, listen, I don't have any money, can you help me? I would have been there in a heartbeat. But don't trick me into this amazing investment that, oh, I'm going to get all this money, I'm going to get the gold and everything else. And in return, I end up at some point waking up and realizing there's nothing there. And no, they probably didn't even own a shovel, never mind a helicopter or land claims or anything else. That's lesson number one with this. Lesson B is another one. Excuse me. I had become very successful trading what I trade. And then I had friends who would come to me, and they'd want me to invest their money. And I kept resisting it and resisting it and resisting it. Well, finally, I caved. This one friend of mine, she's an amazing friend, and we're still friends, but it's a little awkward now. So what happened was this: she gave me $50,000 to invest, and I did. And we would trade, and we would trade up, and we would trade up. And actually, I think in about a month and a half or so, might be off a little bit with my timing, that $50,000 became something like $85,000, $86,000. We were well on the way to making an awful lot of money. And the deal was we're going to split it. But I was reluctant, and I said to her, listen, I don't want to lose any of your money. I don't want to do it. I don't want to do it. But she insisted. And she said, look, if you can just guarantee me $25,000, that's fine, because I know the risks. I said, I'll only do it if you understand the risks. Okay, fine. Well, we were, I'll never forget this. I was in a trade, clear blue skies, everything was cool. I got on a plane in Buffalo, flew to Orlando to meet a bunch of other traders. I got off the plane, all my buddies were there, long faces. It's going back a few years. I said to them, hey guys, nice to see you. Who died? He said, oh, I guess you haven't heard the news. I said, no. What news? President Obama just declared war on Wall Street. Oh, really? Yeah, on the banks or something. And oh my gosh, the market tanked and tanked and tanked. And I think in 2 days it all but wiped us out. I was able to recover just a very little bit of the money. So here I am with this sort of this partnership deal I have with my friend that I didn't want to get into. And I told her what happened. I said to her, but I'm going to tell you something. I'm not going to let you lose. As a matter of fact, I'm going to give you your whole $50,000 back. All right, because I'm not going to do this. I'm not going to let this happen to you, even though I'm no obligation or anything like that, because you know the deal and everything else. And I gave her the $50,000. But I got to be honest, it's a little awkward now. She feels a little awkward, and I feel a little awkward, and it's not worth it. So if your friends, and this is what's going to happen to you, because when you become successful, your friends are going to say, hey, listen, my financial guru is not doing anything for me. They're giving me 3 or 4 or 5% a year, and they think that's really good, and I see you doing that every day and more. How about if you take my money? So your friends are going to want to give you money. Folks, please resist it. Resist that urge, no matter how good the deal is, because if something goes south, okay, it's going to be really a stress on your friendship, and you don't want that. Instead, just refer them to me or whoever your mentor is who got you to that stage, and then let them take it from there. This alleviates any responsibility or any obligation on your part. You don't want to lose your friends, especially over money. Now it's lesson number two, A and B. Lesson number three. There's a company that actually was a steel company in Canada called Stelco, and a friend of mine told me that, hey, this company's going down the tubes. No pun intended, because that's what they made, I guess, steel tubes or something. And he said, why don't you short it? I said, what do you mean? He said, well, you buy it for, no, he said, what do you say? He said, you sell it first, then you buy it back. I said, Dave, what are you smoking? Can I have some? Just joking around, right? And they said, no, really. And then he told me about it. So that was the first time I actually heard about puts or, shorting. And he explained it to me. And I thought this is pretty cool, because at that point I was still just trading equities, just stocks. And I'd be putting a lot of money in. And so he explained to me and how to go with options and with put options. So I thought this is really cool. So be open and be receptive to new ideas. Now be careful that you don't get fooled, but just remember there are new ideas out there that might be really different than what you might have known up until then. And I thought that was really cool, because if it hadn't been for this one event, honestly, I don't know what I would be doing, because this opened a whole new world for me, and I made a lot of money on not just the stock code deal that he had told me about, but on so many other put ideas and short ideas and options ideas that he had come up with and told me about. Here was another one. By the way, all these lessons are not in any order. Okay, they're sort of all over the place, but this was another one. Back in the day, I heard about some company. We were trading all kinds of stuff. My associate Bert and myself, we'd be all over the place. We'd be looking at things, and we didn't even know what we're looking at, but we'd buy, hey, this looks good. Let's buy this. So we bought into this thing called McWaters. It was some mining company or something. And we bought it, and we couldn't sell it, even though this is odd, even though we had it at the ask price. And this was actually a stock. It wasn't options, it was stock. And we're sitting there thinking here, I don't believe this is happening. We got it, we got the order in at the ask price, and it's not selling. What's going on? And I even called the company. I called the company, and this lady answered the phone, and I think she had some kids around and a baby in her arms, and she was in the kitchen cooking. And I got chatting it up with her. She said, "Oh yeah, we're just a small 2-person company here, and the reason if you're trying to sell this is there's just no buyers." Well, there's the ask price. So, well, that could be up there for days. Who knows? She knew nothing about it. And I thought, oh my gosh. So I'm investing all this money into something with a lady in her kitchen cooking dinner for her little kids and probably her husband and some other dude, right? With a shovel in the backyard digging up. I didn't know what this was. That's when I realized, stay away from this garbage. This isn't where I want to go. This isn't trading. This isn't investing. So I stayed away from that. Lesson number 5, and I think a lot of traders get into this. They get lured into the business with penny stocks. Penny stocks. Now, it's a very enticing thing to do, right? Because they're cheap. There could be some great movement in it, and you get in, you make all this money, you get out, and you hear a lot of, there's talk about penny stocks. And when you get into the trading world, suddenly you're on these mailing lists, and now you're getting all these promotional materials from various companies. Read the fine print, folks. You'll find out that it's just promotional material, and there's no guarantees. There's no this, there's no that, and they're just, it's all, again, just a bunch of hype. Now, small caps, penny stocks, I kind of put them up in the same situation here, the same sort of behavior. Here's a chart I took the other day or yesterday, whenever it was, on a company. I have no idea what this company does. I'm not going to say they are a pump and dump. I have nothing to substantiate that at all, but I will say that if this isn't, it is similar. Okay, you'll find similar charts to this. Now, here's the way it works. These companies, they're very small. They have very small volumes, and they're very small priced, okay, like penny or 2 cents. That's why they call them penny stocks. So this is the daily chart here, okay. Every one of these candlesticks represents a day. I'm going to just kind of blow it up here. Now, and I'm going to give a little example here. Now, I run a webinar every Thursday night. Have been doing it for 8+ years, almost 9 years now. And we got a whole bunch of people on there, and people listen to what I say. Now, if I was of that ilk, I could say, hey, listen, guys, I just heard about this stock, and I don't know about you, but I'm going to buy it up because it's very cheap. I'm going to start buying it. Well, what do you think is going to happen the next day? The next day, Friday, they're all going to jump in on this because they want in on this thing. Now, I would never do that because, first of all, it's so wrong, it's not even funny. And also, this can cost you your freedom. So I would never do this. It is just so wrong. I stay away from this. But let's say I discover one of these things and I start buying it up slowly and slowly. Nobody knows I'm doing anything, but I'm accumulating a bunch of shares, right? And then I come on and somehow publicly release this information that I discovered this thing with a stock. And again, it could be any stock out there. I have no idea what this is. I'm just throwing this out there. And then suddenly, right, there's some interest, because if the volume is low and there are people who are going to be putting in thousands of dollars into this thing, suddenly the volume starts picking up. Well, guess what? As soon as it gets up to this point here somewhere, I start selling it, right? I'm dumping it. And if I picked it up for, well, let's see, this stock rose from just under a penny to almost 19 cents in what works out to be a few days here. So let's say I picked it up for 2 cents on average, and I dump it for, I don't know, 16, 18 cents. I made what, 9 times, 10 times my money or something? And the funny thing is, those people who I just stole all that money from, they have no clue that it was me. Is what happens. They say, oh, look at this. Hugh was right. The market did go up. I must have been a little late getting into it. They're going to blame themselves. And then, of course, there's going to be a mass sell-off, and the market comes right back down again. This sucker stopped from, oh my gosh, almost 20 cents here. What about 19 cents all the way back down to what, 2 or 3 cents? Again, in a matter of a few days. This is called a pump and dump. Again, I'm not saying that particular company is, but a lot of them are out there. Stay away from penny stocks, small caps, because some of these can be pump and dumps. Avoid them at all costs, no matter how enticing it might sound. Because you will lose your money. You will lose your money. Maybe not on the first one, maybe not even on the second one. At some point, you're going to get so confident in this trade, all right, in this strategy, and you're going to put a lot of money into it, and it's going to be gone. So by learning all these lessons, I learned what not to do. So I stopped doing more of what not to do, and I started doing more of what to do, and that's where I started making some serious money. Lesson number 6. Oh yeah, I heard about this thing called covered calls. Hey, this is kind of cool. So I took $100,000. I bought a bunch of stock, Krispy Kreme donuts, KKD. So I started trading covered calls on this thing, and then I discovered at some point when I lost a lot of money here that covered calls are really good bullish strategies, and you should not get the stock unless you really kind of want the stock and you own the stock. I didn't really care for the stock. But, and other spreads, not just covered calls, but other spreads. I realized this is just not for me. How did I realize this? Well, again, in about probably, I would say, a month or 2 years ago, this is years and years ago, I was trading covered calls on KKD, and I was making some pretty good money. And then all of a sudden, KKD decided to go south, and then go south and south and south again. And then I got a margin call. Oh, you have to pony up so much money, or we're going to liquidate your account or whatever. So I realized, wait a second, what's going on here? Suddenly this thing is turning on me. I felt very, very offended, very, I took it very personal, and I took it very hard. Like I said, I lost $100,000 on this one strategy, and I thought, this is not for me. Okay, this isn't going to work. And now to this day, I will not go into a KKD, into a Krispy Kreme donut shop. As much as I used to love the donuts, but I don't want to be reminded of this this situation, so I stay away from them. Now, my doctor, I'm sure, will be very happy to hear that because it's probably not very healthy anyway. So, I learned a lesson there. I learned a lesson that for me, now you might be okay with spreads, but I discovered that besides with this, and I was doing these other spreads, I found though that a lot of times I had to roll out into the next strike price or roll out into the next month. And I found it was easy to make mistakes, especially when you had these multi-legged positions that you had to monitor. In some of these cases, you had 3, 4, 5, 6, I don't know, whatever different trades that would make up these spreads. And if you just make one mistake, one small mistake on any one of those, you could be in trouble. So I didn't really like that. So I thought, this is not for me. I want to keep things simple. I'm a simple guy. I want to keep them simple. So I learned a few lessons off this one. Lesson number 7. Another thing, I bought Krispy Kreme because I love the donuts. Who doesn't? Then I realized, never buy a stock because you like the products or the company or your cousin works there or whatever. Take a look at the financials. Take a look at the fundamentals. Take a look at the technicals. Take a look at the psychology of it all. Take a look at the things that matter, not the things that don't matter. I mean, I don't know how many people I talk to, they will buy a company because they like the product or they like the company or so-and-so works there. Wrong reasons to buy a stock. All right, lesson number 8. If you do consider a company, now I only trade SPY now, okay? I only trade SPY, but if you do consider a company, check out the ownership and the management. Track what they are doing. When I had this problem with KKD, Krispy Kreme, at that point, when I was getting these margin calls, that's when I went to, I think it was Finance Yahoo, and I checked into, well, what's this all about? How can this company be so good and suddenly now it's tanking? What happened? And then I found out that there was, I think, one major shareholder, and I think he was dumping a lot of his stocks or something. And I realized, wait a second, I kind of wish I'd have known that. All right, I really kind of wish I had known that. So that's when I realized, if I ever would do this again, and I won't, but if I ever did, I'm going to dig into this company and find out what's going on. What's this all about? What's management doing? What's management doing? Because if they're doing something, obviously they know something about the company I don't know. I don't have to know what it is. All I have to know is that they are doing something very serious, and I should maybe pay attention. And that's exactly what I did not do. That's my big lesson there. You might not think these lessons are important, but sooner or later, folks, you're going to realize that what I'm telling you is actually very true. And that if you'd have learned some of these lessons, that, oh my gosh, I could have saved thousands of dollars. Here's another one. I lost thousands of dollars. Why? Because I traded RIM. It was an earnings trade. And years ago, RIM missed the earnings by a fraction of a cent. A fraction of a cent. And the market punished it immediately, and I forgot what the numbers are now. And again, I got a block on that too. But the market tanked, and I lost thousands of dollars. That's when I realized then that even if earnings are good, there's this thing called volatility. Volatility. And I've traded options where the earnings were great and the stock price went up, but my options went down. It sounds like it doesn't make sense, but that's where I discovered this thing called volatility. And as soon as the event passes that creates high volatility, in other words, the anticipation of the earnings coming out, and then when the earnings do come out, the volatility drops, so do the option prices. I learned that lesson the hard way, so I no longer do earnings trades. No more earnings for Hugh. All right, that's another one gone. And guess what? Every time I learn these lessons, I end up saving a lot more money. I save more money. Lesson number 11. I'll tell you something about trading courses. All right, and I used to go to these trading courses. Of course, many people do, and I'm sure some of them are very good, and I learned a few things in these things. But one of the things I learned over time was that most of these courses, they're just trying to upsell you and stick around. Oh, we'll teach you about this or that. That's another, $5,000. But if you buy it now, it's going to be only, $3,500. And we're going to have that next course next month over in Las Vegas. But if you buy it now and secure your seat, you can get it for $3,400. So we all get in line to the lady in the back of the room with our credit cards in hand, right? See you in Las Vegas. All right, folks. I used to ask the presenters, and they never liked me. I even got asked to leave once. Okay, I put my hand up and say, "So, do you, Mr. Presenter, do you trade your strategy?" And I can never remember any of them saying, "Yes, I do." They all said that I remember. They all said, "Oh no, that's high risk. I don't trade it. I'm just a presenter. I'm this, I'm that. I would never trade." I couldn't believe it. I couldn't believe it. I fold up my books. I'm gone. So let me get this straight. You are asking me to put my hard-earned money, my retirement money, my kids' education funds into something you're telling me, but you don't have the confidence to do this yourself. Folks, and that should be a question you should ask anybody. Do you trade this strategy yourself? And tell me the truth. And if they do not, run. Do not walk. Run to the nearest exit. Also, we got lured into this. When I say we, I'm talking about my associate Bert. I remember I talked him out of this once. There was this one outfit. They had a lot of fancy cars and all these wonderful things and all the pretty women in front of the cars. And, oh, do you want to be like this? Oh yeah, okay. So buy this course. Be careful about trading courses. Don't get pulled into the sizzle. All right. You can rent these things, right? You can rent all this stuff. And there are a lot of presenters out there, smooth, sexy, and swift, and they'll take your money. Is there any substance behind it? That's what you have to look at. I think the people that really make the money, they're not going to be out there flaunting it like this, okay? They might get a little crazy at times, but you're not going to see them. I think this is what they call nouveau rich, okay, where you get a whole ton of money and you just quickly go and spend it on something, and then that's not normal. Be careful. Don't get lured into sizzles. All right. Folks, you got to look for competent mentors. If you're serious about being a trader in the long haul, and if you're new to this, and even if you're experienced and you want to change your strategy, look for competent mentors. Now, they're going to charge reasonable rates. Check the rates. And if you think it's reasonable for what you're getting, contact them, talk to them, go over with them. Don't haggle over the rates, because no mentor wants to. They don't want to be undercut with this kind of stuff, and you're not going to get the service if you cheapened out with what you're paying. Okay, they know what they are worth, and a lot of good ones are going to be worth a lot of money, but you're going to get something out of it. But don't just arbitrarily jump in either. Check them out and see if this is what you want to do. Not all mentors are the same, obviously. In fact, they're all different. But see if the program is what you want. And if it's not what you want, carry on, because every program is going to be a little bit different. Depends on your style, your patience. It depends on how you want to trade. Some people like to swing trade. They like longer term trades. Maybe it depends on your budget. Maybe it depends on your schedule. Maybe if you're still working, you don't have the opportunity to sit in front of a computer all day, or maybe not even in the morning. I mean, there's all kinds of factors that go into it. So make sure that there's a good fit, okay? Make sure there's a good fit. Also, lesson number 14, can you picture yourself happy with the program or software that you're looking for, that you're looking at? I go through some of these programs. I know I don't do this anymore, but back in the day when I did, there's so many programs out there, and I'm sure there's a lot more now, and everybody seems to have one, and they do this and they do that. I got to tell you, make sure that you are happy with what you are seeing. Can you picture yourself doing this? And then the next question you should ask yourself, how much are you willing to spend to find out if it's not for you? If you're like me, you've spent a lot of money on programs that are sitting up in the closet. Several years ago, I was cleaning out my closet, and my wife, I got to tell you, she's got an amazing random access memory to everything I ever spent money on. And I'm not kidding it. When I take some of these programs, and many of them I didn't even open the package, I'm ready to check them out. She said, why are you throwing that out? You paid $4,995 for that one. That other one, you paid almost $6,000 for it. You paid $5,997 for that one, and $3,800 for this. And so she remembered all of that. And thanks for the reminder. I try to forget it. So she would ask me, say, well, why don't you sell it or give it to somebody else for something, or put it on eBay? I said, well, why would I give somebody or sell somebody an inferior program to what I already know? If I already have something much better, why would I do this? It doesn't even make any sense. So I would just throw it out, and I said, look, this is the cost of what we learned today, where I am today. This is the cost. I had to go through this to get to where I am today, and I'm sorry I did it. Actually, I'm not sorry, because that was the cost. I had to go down before I came back up. But you know what? Determine what you are ready to spend. If you're saying, look, I like this program. I think it's good from what I see. I am willing to commit, say, $1,000, and then I will make a decision whether I carry on or I cut out and look for something else if it's not for me. So have a price set and say, I am going to do this. And then you won't be disappointed. No more, no less, and then make the determination. And you know what? Get third-party referrals. Try to find somebody who may have or see what they say. Go to the testimonials or whatever. It's difficult to give third-party referrals. Like, I cannot tell you about the people that have gone through my program who are extremely successful because of the privacy concerns. And I have a lot of people who are actually sort of out there, and people know them as other personalities or whatever, and they kind of want they want to be anonymous. They don't want to be there out there, okay, that way. So we have to protect their privacy. So for that reason, we can't tell you who they are. Lesson number 15: test their support before investing. Any of these companies or training courses that you're considering, contact them. Even if you didn't buy, are they responsive to any questions that you have? I talk to people all the time, and one of the biggest complaints I hear all the time is that they buy the program and then there's really no support, or the support that they were told so-and-so is going to give, well, it's actually somebody else who's actually giving the support, and maybe it's good, maybe it's not, they don't know. They didn't feel comfortable with it anymore. See if this person is responsive. Are you really talking to the person you think you're talking to? Okay, test their support before investing, and if you feel comfortable with it, then get into it. Lesson number 16 rather, trading rooms. Trading rooms. I think many of us have been in these things. Support groups, folks, they don't work. They don't work because why? I've kind of come to the conclusion that traders are just a bunch of insecure people with lots of money looking for somebody to lead them. Okay, and there's always going to be a de facto leader who is going to emerge from trading groups. And the other thing with trading groups, they tend to veer away from whatever the person who is actually conducting or hosting the whatever it is, the conference. So they might have a particular strategy, but then when people group up together, somebody says, "Hey, well, try this, well, try that," and before you know, you're looking at several or more different strategies, and it's just confusing. You're totally off course, and eventually it falls apart. Open-ended online chat rooms. Here's another. We have chat rooms. But our chat rooms, they go for 30 to 45 minutes. They are events. They're not drop-in centers. All right. It's not one of these things that's open all day. You just kind of drop in. Hey, Joe, what are you doing today? Well, I'm going to play with the grandkids. I'm going to go golfing. I'm going to do this. I'm going to do that. Well, are you doing any trading? No, I'm just kind of hanging out. That's not a trading room. That's just a coffee club. Our trading rooms, you get in. We discuss what we're going to be doing, what we're looking at, what I'm interested in. I get into a trade, get out of the trade, whatever. Okay. They are events. Okay. These online chat rooms, again, there will be a de facto leader that emerges. And by that, I mean the person with the most charisma, the one maybe who talks the most, who has the best stories. And people will naturally rely on that person as being an expert. And that might be completely, they're unrelated. So that doesn't really work. So then if that person suddenly jumps up and yells, "Oh my gosh, the market's going down, sell, sell, sell," you're going to get everybody going, tick, 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 sell, sell, sell. And then had they waited 5-10 minutes later, the market's coming back up again. And not only would they have not lost, but they would have made some money. Why do I tell you this? Because it happened to me and a bunch of my friends. That's when I knew I'm gone. No more chat rooms like this. That is a recipe for disaster. Find somebody that you trust, somebody that you're going to use as a mentor. Stay with them. Lesson number 18. It's impossible. You got to understand this, folks. It's impossible for anyone to know where the market's going. The only people that will reasonably know where the market's going are those people who create the markets, like market makers, or say the CEO of a particular company who is going to talk his stock down to move it down for some strange reason or who knows why. They will know. But do you think they're going to tell you in advance? That's not going to happen. Don't listen to the, quote, experts. Don't listen to the market channels on TV. All right? They make their money on selling advertising, creating hype, different things. You become the expert. You do become the expert yourself, and you can. You can become the expert yourself with your own trading. Lesson 19. Find a program that fits you. Every program is different. I don't care if you come with me or not. I wish you all the best with whatever program you go with. We have a very good program, but this might not be the right fit for you. And if I don't think that you're the right fit for this, I will tell you that too. Check the program. Does it match up with your temperament, your schedule, your budget, your goals? If the answers are yes and you're interested in this, we have a match. We're good to go. Lesson number 20. If it stops being fun, or you're in a losing position all the time, or it's really challenging, or you're always sweating it, or you sleepless nights, or you're fighting with the wife and kicking the dog, stop. You got to stop this. Where do you think it's going to end? It's not going to be good. Stop whatever it is that you're doing. Then regroup, take a look, re-enter the market when you're emotionally sound and you found something that's actually conducive to what you're like, what you want to do. Go back and reassess everything. Because if you don't do this, you will lose all your money. That's why they say, and I don't know what the number is, I hear 95%, could be even higher. That's how many people quit trading after 1 year. They get into the market, they lose all their money, and bang, they're gone. Gone, gone, gone. Why? Because they lost all their money, and they didn't have to. If I had one word to explain this, I would say perseverance. If you can stay in the market, first time, start in 1 year, 2 years, 3 years, just do 1 year at a time. Learn those lessons, all right? And then just persevere and stay with it. If something is not working, pull back, stop, change whatever needs to change, and then carry on. Try something else, all right? That's the name of the game. I'm going to tell you a little bit about what we do, just in case you might like what we do. We are Day Trade Spy, daytradespy.com. We trade, and this is what I learned. I learned this the hard way. In all the years I've been doing this, I learned that there's one stock, SPY, that I really, really like. It's based on the top 500 stocks, S&P 500. All right. Did you have a coffee at McDonald's this morning on your way to the Bank of America to get some money so you can go shopping at Coach or Macy's? Did you drive in your Ford? Did you stop at Chevron for gas? All of those companies are in the top 500. That's what you want. Get the quality stuff. Get the quality. You don't need garbage. We base it on SPY. Why SPY? SPY is highly liquid. It's the most highest traded stock out there. I have traded over $100,000 in single trade options, and I got filled instantly. Whatever I throw at SPY, it can handle. I don't have to worry about getting into a roach motel where I can get in, but I can't get out. It's highly liquid. Whatever, there's always going to be a market there. It's highly diversified. People ask me, how come you don't diversify? I say, I can't think of a more diverse stock than SPY. They're all there. All the sectors are in SPY. And that means that there isn't going to be any one sector that's going to bring it down on its own. SPY has predictable behavior. I can tell by the news coming up, the news that happened, where SPY is going to go. And that's pretty cool. So if you're looking to make money, and that's what we do, folks. All right, if you want to learn all about the stock market, a lot of places you can go for free, some of them. If you want to make money, this is where you need to be. SPY, I love it. They also trade late. Options go to 4:15 every day. How cool is that? One stock, one strategy, 1 hour a day. Make some serious money in the market. Folks, as an options trader, as day traders, we don't trade spreads. I stay away from spreads, nothing high, ultra high risk. I mean, there's always going to be a risk. I'm not going to get into any naked positions or anything where I'm going to be really scared out of a position and never to come back in again. There's going to be none of this nightly scans anymore. You might have gone into these groups and they say, well, check your scans the night before. Meanwhile, you're there for hours the night before, alienated from your family. That's not what I want to do. There's going to be no heavy pre-market preparation. As a matter of fact, I get in front of my computer at about 8:30 in the morning. I take a look and see what's going on in the news, what's coming up, how's the market reacting to the news, what are the pundits saying, what are the people saying to the pundits, how's things going, where's it looking to go? I look at the technical indicators. I get a feel for what are people thinking, what are the traders, where are the traders? Oh, volatility is really, really high. Oh, I don't think the traders are going to be there. Oh, we're getting into a long weekend. Okay, I think the traders will probably be cutting out a little bit early on a Thursday afternoon. I think of all these things and I put that into my preparation. All right. And what I love about this, there's no sitting in front of the computer all day unless you want to. Now, we have this thing called the Ultimate Training Course. And I got to tell you, most of the people that go through the Ultimate Training Course do enjoy trading 3 or 4 or 5 times a day. And they come back with double-digit daily profits every day, they tell me. But you don't have to. What I like to do is get in, make a trade, 6, 7, 8%. I'm happy with that. Imagine making that every day. It's not only possible, it's doable. Folks, what I love most, we make the market our slaves, not us, the slaves to it. And I think that's really, really important. All right, services. We have some services. We've got the inner circle. All right, this is what we started, and again, quite by accident. What happened was, I'm going to get this really quick here because a lot of things to talk to you about. It was quite by accident. When I started making some serious money on the market, my friends, family, neighbors would say, "Hey, Hugh, what are you doing? You're obviously onto something. I see, you're coming up with some toys, pretty cool toys, new cars, vacations, new house, new airplane." Okay. Well, I said I'm trading options, so they coerced me into showing them. They say, "Well, you got to show me. Can you put it up on a website? Just tell me what you're looking to trade every day." So that's what started with the inner circle, and we're still doing the inner circle. Every morning, I tell everybody what I'm looking to trade with a follow-up report later in the day, and our Thursday night introductory webinars. Not introduction, but we have interactive sessions where people come up with their own questions, and we address those. They're also recorded. Anyway, it keeps you in the loop with what we do and changing market conditions. We have the ultimate training course. Now, this is where no stone is left unturned. You are going to learn everything that I do every day to make some serious money in the market. You're going to master it. And I say that because the ultimate training course brings in all the videos and ebooks, and then you bring it all together in the trading room. With the ultimate training course, you get 2 months in the trading room free. That's all part of it. So you're going to apply all that knowledge. You're going to walk away knowing what to do. Trading room, there it is right there. You're going to shadow me 30 to 45 minutes a day. All right. And it's a training session, folks. It's not just, hey, here's what I'm doing, here's what I'm doing. No. We talk about everything that we're going to do.